All right, welcome back. Consumer prices rising during the holidays, making the increase in inflation the largest we've seen since 1982 over the past couple of months, or 12 months, I should say. The consumer price index rose to 7%. Economists had originally forecast a 4% increase. This could cause the Federal Reserve to increase interest rates as early as March. Of course, a cause to the high inflation is the COVID-19 pandemic and the supply chain issues we've seen. And as we've seen the prices go up, of course, President Biden's approval rating continues to slide, now down to 33%, according to a Quinnipiac poll. Joining us now to talk more about this, business and market analyst Seth Denson. He's a Newsmax contributor. And also here is chartered financial analyst Marco Mazzocco. He's also the owner of Common Sense Research, a financial blog and advisory service. Marco, great to have you with us.
Thanks for having me, John. I'm excited to be here.
No problem. Seth, Marco sends me a tweet almost every time we do one of these Money Huddle segments. He's always weighing in. I love his feedback. I thought I'd get him involved here with us on the panel.
I'm not shouting from the bleachers this time.
That's right. You're among us.
Marco, welcome to the huddle.
Yes, we're all huddled up here.
You.
So let's talk about inflation and what you guys are telling your clients. You know, what are we supposed to do? I mean, everybody's scared about this. You're hearing from the administration that we're not going to see this really let up maybe until 2025. That is, you know, from a White House tweet this week. But Marco, what are you telling your clients?
There's not much we can do because we're stuck in this mostly because of the policy decisions out of Washington dealing with energy policies. Because until we can get the cost of energy back down and get back to a pro-domestic energy production standpoint, we're really stuck here. And the Fed, whatever they do with interest rates and whatever they do with the balance sheet is not going to get prices at the pump lower. And that's really what we need to see, because energy costs are such a critical component in all sectors, all industries, and it's really, really bad this time around because not only are we seeing rising producer prices, say just like what we saw in today's PPI, where it costs producers more to get goods out, service providers, because their energy costs are up, but then consumers are also getting hit on their side just by having to pay for gas at the pump, higher heating bills, et cetera, et cetera. So it really is a huge drag on consumption. And unfortunately, until we get a change in this policy, I kind of feel like we're stuck here.
But Seth, I thought we could just bring the big meat producers to heel, and that would make everything go away. To Marco's point, too, I saw that the barrel of oil is up again over $82, I think. And, this is not going away.
Well, it's not. Matter of fact, energy stocks, what is this, day 13 of the new year? Energy stocks are up 14% since the beginning of the year. So they're rising at a percentage point a day right now. And listen, if you are looking at your own portfolio, as I am mine, I'm starting to look at these value stocks. I'm looking at energy stocks as maybe a good path forward because that's certainly what we're going to need to look at. I think, listen, Jerome Powell does not have his finger on the pulse of this inflation. He hasn't since the beginning, nor does he now. And he's now kind of admitting it a little bit. We're all in a wait and see, and the more we talk about shutdowns, the less we get people back to work. I know unemployment, the White House is claiming down. I'm watching the U6 report. That's the real unemployment report, and that's double what the U3, which is the official unemployment rate, is.
Oh, wow, these technical terms. I love it. And also, Seth, I like the beard, too. The winter look.
Hey, listen, John, I know because congratulations, by the way, on Georgia. NFL football starts. This is my year for my Cowboys. I'm taking an NHL approach.
Okay.
And I'm just going to not shave.
I like it,
the
playoff beard. Well, I wanted to ask you guys about something else, too, because, there are a lot of conflicting stories out there about the status of the economy, what's going to happen long-term here. And we were a little curious because we saw this one story from the AP here. They were reporting that the U.S. actually posted the smallest monthly deficit in 2 years back in December. Is this some good news, maybe, Marco? What's up with this?
I think the good news lies in the fact that we actually are having record tax revenue coming in. The Tax Foundation just put out a report that federal tax revenues are actually at an all-time high. So the bottom line is the TCJA, the Tax Cut and Jobs Act, it worked. So people like to go against that, but the bottom line is it really worked and it helped keep an expansion going. And, that's what we're seeing in these increased tax revenues. So that's a great thing.
Is that how you see it, Seth?
Marco's right, John. Listen, the government's not spending less. They're actually starting to take in more. And that's because the economy is opening up. We got dollars out there. People are spending them. People are going back to work in some ways. That's generating payroll tax revenue, and that's really what's driving this here.
All right. Well, we're always excited to hear the deficit's going down. Will it last? I don't know. But your point is well taken, Seth. Of course, the government isn't spending less money. They're just taking more in. All right, Seth, Marco, great to have you with us, guys. A great huddle up. We'll talk soon.
Thank you.
All right. That's going